Hello everyone. Welcome to yet another chapter of grade 11th accountancy. This is Bills of Exchange. Bills of exchange is an instrument in writing containing an unconditional order signed by the maker, directing a certain person to pay a sum of money only to or to the order of a certain person or to the bearer of the instrument. Now, bills of exchange happens or people use this instrument when there is a credit transaction. Instead of paying cash, they pay the bill of exchange. The person who is making the bill is the person who is supposed to meet the bill. That means he is supposed to pay the amount in the credit transaction. Parts of a bill of exchange, very important components are date. That means on what date the bill was prepared. Term, how long will the bill go? That means up to what time duration, say 2 months, 3 months, 50 days. What is a term of a bill of exchange? And at the end of this term, next 3 days of grace are also included. Amount, the actual amount of the bill is written on bill of exchange. That means it is not always whether the entire transaction is to be paid in bill of exchange. Sometimes they pay a cash payment on the spot and the remaining amount can be prepared in bills of exchange. Stamp, that is a revenue stamp recognized by RBI, and the name of parties, that means who are involved in exchange of bill. This is a specimen of bills of exchange that you can see. Name of the person to whom the bill is drawn, stamp, date. Special feature. A bill of exchange is an instrument in writing. It must be signed by the maker. Maker means the person who prepares the bill. That means the one who draws the bill, who is a drawer, who is supposed to take money at the end of a stipulated period of time. It contains an unconditional order. Unconditional, that means the payer is not exempted in any of the situation. The order must be to pay money and money only. It cannot be anything else instead of cash or in terms of a bank transaction. The sum payable must be specific. The amount must be paid within a stipulated time. The name of a drawee must be clearly mentioned. Drawee is a person who is supposed to pay the bill, who is supposed to meet up the amount. Drawer is a person who writes the bill. It must be dated and stamped. Parties to a bill of exchange. Parties means the people who are involved in preparing bills of exchange. Drawer. A person who draws or writes the bill of exchange is called drawer. That means he must be a seller or a creditor to whom the money is to be paid. The money is owing. Drawee. Drawee is a person on whom the bill is drawn. That means in credit transaction, he is a purchaser or debtor who is ordered by a drawer to pay the amount. So two parties are very much clear over here. One is drawer, another one is drawee. Drawer is the one who prepares the bill. Drawee is the one who meets up the bill. Third person is payee. The person who has the right to receive the amount of the bill is called payee. Most of the time, the payee is always a drawer himself, but sometimes it happens that the drawee endorses the bill to his creditor. So, in this case, the payee can be a third party or a third person. Acceptance of bill of exchange. Now, once credit transaction is done, after that there is acceptance of bills of exchange. The drawer signs across the face of the bill. Face of the bill, that means exactly in the middle of the document, with or without the words accepted. This denotes his acceptance of the bill. Such acceptance may be general or unqualified and qualified. Now, qualified means on what date, what time, and by whom the payment is made. This will be seen in the next slide. Acceptance is always made by a drawee. That means he has accepted the bill and he will meet up the amount on a stipulated period of time. Qualified and general. In general or unqualified, the drawee accepts to pay the whole amount mentioned in the bill without any condition. While qualified, here the drawee accepts to pay the bill subject to some conditions regarding amounts, tenor of the bill. Tenor of the bill, that means tenure, at what intervals he is going to pay the amount. Date of maturity. It is the date on which the amount of bill becomes payable by the drawee. A bill of exchange payable at sight becomes due immediately after its presentation for payment. Payable at sight, that means on the date of maturity, it should be met. A term bill becomes due when the period of a bill is over. So 3 days grace are added with it. That means 3 days of margin or exemption is also given to the customers. If the bill is payable sometime after date, the tenor should be counted from the date of drawing the bill. That means on what date the bill was prepared, from that day the tenor means duration of the bill should be counted. If the bill is payable sometimes after sight, the tenor should be counted from the date of acceptance of the bill. So depending on the situation, whether the bill is made after sight or on the sight. If the due date turns out as public holiday, the due date shall be preceding working day. That means one day before and not one day late. Discounting of a bill. This is one of the case when the drawer is in hurry to meet up the bill. The drawer wants the money as soon as possible. So instead of collecting money from the drawee, the drawer will discount that amount from the bank. The amount of bill that is mentioned on the bill is paid less than the actual amount. That is why the difference amount is considered as the discount of bill. If the holder of the bill wants to get money against the amount mentioned in the bill at an earlier date, as I said, that the drawer is in hurry. Before the due date, he sells the bill to the banker. Now, selling the bill to the banker is what? The entire responsibility of collection of money is now on the banker's hand. The latter pays cash against the bill after deducting some amount as discount charge. That means the later means the bank will pay the amount to the drawer. Endorsement of the bill. Endorsement of the bill, that means forwarding bill to one owns creditor. In the case of endorsement, the drawer may use this negotiable instrument, this bill, as cash. Instead of paying money to his or her creditor, he will pay the bill of exchange, and that is called endorsement of bill. Okay, forwarding one's own liability. It means the signing on the back for transferring his own right on the bill to some other person. The maker or the holder of the bill signs on the bill or on its back or on a separate sheet of paper annexed with the bill. The transfer of the right is called endorser, and the person whom transfer is made is called endorsee. Now, the endorser is supposed to collect the amount from the drawee, and the drawee remains the drawee, but the middleman in between drawer becomes the endorsee. Next important point is dishonor of bill of exchange. Now, as the word suggests, dishonor, that means not meeting up the bill on the due date, not paying the amount on the due date is called dishonor of bill of exchange. If the drawee of a bill does not accept it, it becomes a dishonor of bill by non acceptance. If the drawee accepts the bill but fails to pay its amount on the due date, it becomes dishonor of the bill or non payment. Bill of exchange will have following journal entry. As children, we have learned there are main three cases. One, when the drawee keeps the bill till the date of maturity, that is called retaining the bills till the date of maturity. Next is discounting the bill with bank of drawee. Next is sending bill for collection to the bank. And in all these three cases, if there is a dishonor or failure of payment, what are the journal entries which are to be passed? Okay. So one by one, we will be looking into all the cases of bills of exchange and journal entries thereon. Very important and very basic. The transaction when the drawer retains the bill with him till the date of its maturity and gets the same collected directly. That means on the date of maturity, the drawer will collect it. That means drawer will get the money from drawing. Transactions, sale or purchase of goods, receiving, accepting of the bill, collection of the bill. Now here, in this case, there are two parties. One is drawer and another is drawee. Now, in both the parties' books, we have to pass journal entry. So we shall focus on the books of drawer. When there is sale of goods, so debtors account debited to sales account as it is a credit transaction. Next, instead of money, the drawer is receiving a bill of exchange. So for drawer, that is bills receivable because he has made sales. So instead of money, he is receiving bills. So bills receivable account debited to debtor. And on the date of maturity, the bill is collected. That means the bill is honored. So in the books of drawer, cash comes in, cash account that is why is debited, cash account debited to bills receivable accounts. Next is in the books of drawee or the person who is accepting to pay the bill on time. So in his books there will be purchase. Purchase account debited to creditor as it is a credit transaction. It will be debited to creditors. Creditors account debited to bills payable. Bills payable account debited to cash and bank. Now, on accepting the bill, as he is the drawee is a creditor to him, it will be acceptance of payment, and though he has made the purchases, he becomes a payer. So there will be bills payable in his books of accounts. And on the date of maturity, when he actually pays the money, the journal entry will be bills payable to cash. Now you can see one important thing in both the drawer and drawee, whatsoever bill account is open will be nullified and closed. That means bills receivable is debited over here. Same way it will be credited over here. Same way in bills payable also. Bills payable is credited and it is nullified by making it debit. This is the basic and simple way where the bill is retained till the date of maturity. Next case is when the bill is retained by the drawer with him and sent to bank for collection few days before maturity. In that case, again, there will be one additional journal entry. As you can see in the books of drawer, there is a credit sales, data's account debited to sales account on credit sales. Next, receiving of bill of exchange instead of cash, bills receivable account debited to data's account. Then comes bills sent for collection. So this is the additional journal entry that is done in the case of bills sent for collection, and date will be mentioned here in the numerical question. Bills sent for collection account debited to bills receivable account. On receiving from bank, advise that the bill has been collected. Now bank will play an important role here. Bank will collect the bill or the money directly from the drawer. So when the the drawee has paid amount in the bank, then bank account debited to bill sent for collection. So here we can see bills receivable was open in this journal entry. It is closed in this journal entry. Bill sent for collection is also open in this journal entry, and then it is closed by giving a reverse effect that is called nullifying effect. Same way in the books of drawee. First of all, when he'll make a credit purchase, he'll create a creditor, then purchase account debited to creditor, then creditor to bills payable. Here in his book, there won't be any journal entry because he is unaware about the process of sending the bill for collection, and that's why on the due date, he'll simply make the payment for his bills payable in his bank. So this is the case in the books of drawer. Whenever there is sending for collection, there is one journal entry, additional journal entry in the books of drawer. Now, next is when the drawer gets bill discounted from the bank. So, he is in hurry, and before the date of maturity, when he wants the money, he will discount the bill with cash. So in the books of drawer, when there is a credit sales, later account debited to sales account, accepting the bill by the drawee, that is receiving the bill from the drawer. So bills receivable account debited to debtor. Now this is the time before the date of maturity the drawer wants money. So in this case, he will get money in his bank, but the difference amount or the less amount that he is not getting is discount account, and according to the nominal rule, debit all expenses and losses. Here discount is also debited. So bank account debited, discount account debited to bills receivable account. This account over here remains the same because it has the actual amount of sale or purchase, and it has the original journal entry with it synchronized. On the maturity of bill here, now drawer has already received the money, so he is not waiting for the date of maturity. So there will be no journal entry on the date of maturity of the bill when the drawer has already discounted the bill with bank. In the books of drawee or acceptor, on purchase, the journal entries purchase account debited to creditors, creditors account debited to bills payable on the acceptance of bill. And again, this person is not aware about the discounting process, so there is no journal entry here. In the books of drawee or acceptor, he will meet up the bills payable on the maturity date. So bills payable account debited to bank account. So these are the journal entries in the case when the drawer gets the bill discounted from the bank. Next is when the bill is endorsed by the drawer in favor of his creditor. Now endorsement is a case when the third party is involved. The drawer also has some creditor and he also has some amount to be payable to his creditor. So in that case, we can see how it is done. The journal entry, first journal entry on the per sale of goods on credit, debtors account debited to sales, receiving or accepting the bill. So here in the books of drawer, it is receiving of bills of exchange. So instead of cash, the drawer is receiving bills of exchange, bills receivable, account debited to debtors, endorsing the bill. Now to his creditor, the drawer will pay bills receivable instead of cash. And now the creditor of this drawer becomes the endorsee and he is supposed to receive money on the date of maturity. Now, on the date of maturity, the drawer is not in a position of bills of exchange because he has already given his bills receivable to his creditor. And that's why on the day of maturity of the bill, there is no entry in the books of drawer. Now, in the books of drawee, how does this endorsement effect? Logically, the drawee is not aware about this arrangement, so he will have the same journal entry as regular. On the time of purchase, there will be purchase account debited to creditor's account. On the acceptance of bills payable, it is creditor's account debited to bills payable. The bills payable account is open over here. On endorsement, he is not aware about any arrangement, so there won't be any journal entry. And then on the day of maturity, he will pay the bill to bank. That means he will meet up the bills. Next important point in bills of exchange is dishonor of bill of exchange. Now, dishonor happens when the drawee refuses to pay the bill amount. So, at that time, the bill is considered to be dishonor. The way we say the check is bounced or check is dishonored, same way bills are also dishonored. And there are certain journal entries which are to be made in a reverse manner in the books of drawer. We'll see a simple example which will make you clear about the dishonor of bill. A bill is said to have been dishonored when the drawee fails to make the payment on the date of maturity. In this situation, liability of the acceptor is restored. Therefore, the entries made on the receipt of the bill should be reversed. For example, Anju received bill of exchange duly accepted by Manju, which was dishonored. The entries of dishonor will be as follows. When the bill was kept by Anju with her till maturity, so Manju's account debited to bills receivable. Here, this is in the books of Anju, who is drawer. When the bill had been endorsed by Anju in favor of Sandhya, Manju's account debited to Sandhya. When the bill was discounted by Anju with his bank, Manju's account debited to bank. When the bill was sent for collection by Anju, Manju's account debited to bill sent for collection. So ultimately, we can see that whenever the bill is discounted or sent for collection or endorsed, dishonored, the drawee's account will be debited. In the books of drawer, here in this case, Anju is a drawer and Manju is drawee. So in every case of dishonor, the drawee account is debited, whatsoever case may be, as the drawee fails to pay the money, his amount, his account, and the same amount will be debited in the books of drawer. That's all for the chapter Bills of Exchange. Thanks for watching. Take care.